Good afternoon, everyone. Glad that everyone can come here after lunch and settle in to take a nice nap before the rest of the sessions this afternoon. My name is Michael Henry. I'm a principal with KPMG in New York. And just a show of hands, how many people have heard of KPMG before? A few? Just a few of you? Okay, good. We have kind of a brand name in certain areas, and I think, hope you'll agree, one of them is in the compliance space. A large part of our practice is helping clients solve problems related to regulatory compliance and regulatory reporting. Any of you who work in this area will know that there are some characteristics of work in the compliance space. One, it's become a lot more expensive. Before 2007, 2008, some people don't like to talk about compliance. Before 2007, 2008, the cost of compliance for a bank was somewhere between 3 and 4% of net revenue. Currently, it's over 20% and climbing. I have one client we're working with today. They have an offshore center in India where they have 3,500 people working in KYC, AML, tax compliance, know your customer, anti-money laundering, tax compliance. One of the reasons we're working with them is because they have done their own projections, and they've said, well, in the next 3 years, we need to grow this center from 3,500 people to 6,000 people. And that's neglecting the other thousands of people who are working in middle and back office in the different locations. That's just their centralized KYC center. And everywhere I go, even small banks. I was talking to a bank, it is an Australian bank, and the New York branch of this bank has 125 people doing KYC, AML, and tax processing. So it's a huge problem. Because it involves a number of people, it creates a number of second-order problems, which I'll get to in a second. So what we've done as KPMG, we've looked at this space and said, this is untenable. There are so many solutions to the problems in this space that have already been used in front and middle office, and we'd like to apply them to this problem. So we teamed with MarKLogic and created a solution around the MarKLogic platform. And what we're going to do is show you today, my friend Justin and I are going to show you today what we've done, and we'll show you kind of a demo of how it works. But the main message today is in the compliance space, it is foolish to continue to attack this problem with human beings because the digital laborer is capable of doing it and capable of doing it better. All right, that's what we're going to talk about today. Is that all right with everyone? All right, thank you. All right, it's a mess. I bought an apartment in New York City earlier this year, and the process of getting a mortgage, at least in my country, has changed a lot since the last time I did it, which was 15 or 20 years ago. How many of you have been to a bank and had a disappointing customer experience? So I'm already a customer of the bank that I was applying for my mortgage. They did my last mortgage. I've had demand accounts and savings accounts and an investment account for more than 20 years with this bank. And they were the biggest problem, the biggest barrier between getting from me to closing was getting the approval and the commitment from the bank. And they kept doing things, very value-added tasks like, Mr. Henry, could you please send us the last 3 months' statement of your bank accounts? I said, excuse me, I have the bank accounts with you. Anyway, and that's on an individual level. At a corporate level, from the time a prime broker does a handshake with a hedge fund to the time the account is provisioned and they're able to trade, 12 months can go by. 12 months of KYC and due diligence. And we do business cases for our clients. There's an abandonment rate in wealth management, prime broking, investment banking of more than 25%. Handshakes that never turn into accounts being provisioned. And now, if it was because the bank was doing all these KYC, AML checks and coming up with bad actors we don't want to do business with, that would be okay if those were the 25%, but they're not. These are cases where the client has simply gotten tired of the process and left. client experience, I'm working with a bank right now where they said, hey, all this cost stuff and automation sounds good, but what we really want to do is just make the experience better for the client. They're a business banking, a small commercial banking business of a big US bank, and they are tired. As you can imagine, they serve product up to this client through different silos of the bank, and every time they've got to go and start the KYC process for a new lending product or a cash management product or some other type of product where they have to start the KYC process over again. And even worse, if a client, heaven forbid, calls and says, hey, I'm interested in doing business with you, when is it going to be ready? What does the bank say? What do they say? We don't know. The bank knows as much as you in this room about where that process is. It's a terrible process. There's a requirement for anti-money laundering regulations to do negative news search. I can tell you the name of a blue chip bank headquartered in my country. They have a big center in Brooklyn where they have 350 people doing negative news search. And they have very sophisticated technology. They use WorldCheck and this new negative news KYC utility called Google. And they have programmed, they've used the Google API, that's pretty sophisticated, and they've programmed 25 searches on Google. So you put in Michael Henry, money laundering, Michael Henry, Sudan, Michael Henry, terrorism. By the way, my name is very common, so I love to do this on myself because I get all sorts of hits. My biggest defense, if I ever wanted to launder money, is my name is common. They'll never be able to find me. So, but what they'll do is they'll do a WorldCheck search. That's great. That'll give them the PEP check, politically exposed person check. They'll do the news search on Google with these scripts. They'll take back the first 100 hits. Then they will use a very sophisticated technology called Control-C. Then they'll do another one called Alt-Tab into a Word document that has 2 columns, and they'll paste it into Word. And they'll do that for the 100 hits. And then the second column in that Microsoft Word document is their annotations. Terrible. And then consider regulations also change. So whatever process you have in place in your 3,000 person, 3,500 person center in India, can you imagine, oh, we've now decided, you know, there's been this thing with Panama and shell companies. We'd kind of like to know now when we onboard a client, is it actually just a shell company or is it a real company? Here's a series of checks that we can put in place. Could you please communicate that out to the network of thousands and thousands of people where eventually it will land on the desk of the $11 an hour file clerk in Manila who will then determine the future of your bank. All right, and so one of the projects we're working on now, the bank is under a directive from the regulator that says, you know, you have identified that you have, in this case, 200,000 high-risk clients in your portfolio. We need you to check to make sure that your KYC documentation is up to date, and you have a year to do it. So already the bank is struggling to keep up with new customers and attracting new business. In addition, God forbid they should fall behind. Let's say they're keeping up. In addition, there are cycles of these renewals. Documents expire. Events happen that the regulators will mandate that you renew and refresh your documentation. For tax compliance, W-8s and W-9 forms expire. So what happens is you get these big bulges of activity. And thank goodness, because I've got many partners in KPMG who have bought retirement homes based on those bulges. Because what's the typical response of a bank? When, okay, I've got to renew these 100,000 accounts, all of my people are busy doing business as usual onboarding, what do? You call people, you call somebody, right? You call somebody, everybody's, not just KPMG, everybody's in this space. This is a body shopping wet dream, right? Because low-skilled people, process well-defined, low-cost locations usually, and so you have this constant influx of activity which you can never keep up with. And this client I'm working with now in their 3,500 person center, they have an attrition rate in that center of 10% per month. And by the way, if any of you have career aspirations, now that I've told you about the great job opportunity to do this work, if you have aspirations to go work in one of these cubicle farms offshore, you will certainly be able to find work. There's a reason the attrition rate is 10% a month. Why? The work sucks. It's terrible work. I have another client we're talking to right now. They call it stare and compare. Right? The work that we're talking about here is the client has given me a document, some sort of company identification document, a letter of representation, a financial statement. If it's for tax purposes, a W form. The bank will scan it at point of reception. That's great. It's been digitized. Now what kind of document is it? It's a PDF. Wonderful. You're going to see an example of this in a second. And somebody's going to pull this document up on a screen and say, okay, who is the beneficial owner of this trust? Click, click. Is that guy? Yeah, that's the guy. And type it in over here. Or someone's going to pull up one of these documents and say, oh, this W form, this is signed in 2012. It's expired. Put in a request to get a new one. Terrible, terrible work. Nobody wants to do this. All right, so what happens in a typical large organization like my mortgage lender or the clients I'm working with? In the center here, you've got central compliance and tax. So this is your financial crime group. This is the group that says, for every client, we want to establish global minimum standards, how to identify a client, what's our basic due diligence we want to run on every client. And then what happens is for different products, different client types, different jurisdictions, we have what we call local uplift. So in addition to the global minimum standards, if this is a Mexican private company, you would apply this additional set of KYC AML rules. If they want to do a kind of a more complex product, then with a higher risk product, you would add additional due diligence on top of that. And if you identified a high risk individual as one of the beneficial owners or having a relationship to a beneficial owner, you would also have to run additional due diligence on that person and his associates. So I would do that. I've got the client, he comes in the commercial bank. I've gone through all of that. That client has gone through 6 or 7 months of KYC, AML, due diligence. And then that same client, he decides, you know what, I'm the CEO of that Mexican mining company. I personally have assets that I'd like to invest. Bank, can you help me? So the bank, of course, will send over somebody from the wealth management division to talk to him. We'll go over and say, these are all our products. We're great. You already bank with us. This is wonderful. You've got several $1 million you want to invest. Wonderful. They shake hands. What happens? Yeah. Let me just put you through our KYC process. And since it's wealth management, there are things that wealth managers have to look for. For example, source of wealth tends to be very important in wealth management. And so that would be new. But everything else, the guy's got to do again. I know from the banks that are at least trying to solve the problem, the wealth management guy will call the commercial banking guy and say, do you have this information? Oh, yeah. He gave us his articles of incorporation last year when we onboarded him. Okay, can you send it over? So the guy will pull it out of that document warehouse. You know, now I have it on screen. What kind of document is that again? It's a PDF. So what has to happen again? Stare and compare. Horrible. So you get this kind of mess. And then, of course, what everyone has learned is that, oh, you know what? A lot of this work is low value. Let's go offshore and set up some cubicle farm in some wage slave country where we don't mind that the attrition is so high. And by the way, if that $11 an hour clerk makes a mistake and your client ends up doing business with Sudan or Cuba or is funding a terrorist organization, you're depending on that file clerk's audit trail to defend the bank. The banks don't get into trouble because I do business with a sanctioned country. The bank doesn't control me. The bank gets in trouble because I do business with a sanctioned country and the bank fails to explain to the regulator's satisfaction how they checked me, what documents they looked at, when, did they have evidence that I was going to do that activity. If the banks that get these big fines are the ones either they can't answer the question or there was a bad actor that wasn't caught. So what we've done is we've looked at this and said, well, look, there's got to be a better way to do this. And I'm not going to spend too much time on my Starship Enterprise slide here. Just make a couple of points. We worked with MarKLogic and a number of other advanced software providers to put together a platform that takes away the key pain points of this process. Well, I'll get into more detail, but the idea is there's some key principles. We only want to collect data once. Second, we want to remove people as much as possible from the activity of digitizing those data. If I get a PDF, fine, I get a PDF. If I get a handwritten form, I get a handwritten form. But once I ingest it, I should be able to use those data in an automated way without having people stare and compare and type. And if I move from one silo of the bank to another, we would all love to be in the world where banks can share customer information. That's not happening yet, but at least within the bank, we should be able to share information. And from a compliance and tax point of view, if I'm the head of compliance, if I'm the head of KYC for a large bank, I should be comfortable that when I decide on policies that are going to be implemented, they actually get implemented. I don't have to wait months and months and months for that to ripple through the chain to eventually get to the cubicle farm. Okay, how do we do this? We have MarKLogic at the center of everything we do, and the way this works is we have a set of technologies that will read and ingest documents in unstructured format. We're going to show you a demo. Justin's going to show you a demo of that in a second. So when I get financial statement, articles of incorporation, even easy things like tax forms, we scan them. We've done lots of time and motion studies on this. We still have some people involved in the process managing exceptions. But in general, we get a 2 order of magnitude decrease in the human effort of ingesting documents. I'll show, it'll be more powerful when I show you the demo. On the upper left, we have the policy engine. All of the KYC AML policies, this minimum due diligence we talked about, the rules about the validity of documents, the rules about tax classification, when do I need what document from what customer, when do documents expire, what makes somebody a high, medium, or low risk client, and what additional due diligence checks do I need to run on that? All that is automated in our policy engine. And then what we do is MarKLogic pulls that all that in on runtime and executes it in an automated way. So overall, I'll show you some statistics in a second, but overall, we're looking at about 1 order of magnitude decrease in the number of people for these kind of functions. So when the bank I was telling you about that has 125 people, it's a small bank, they have 125 people in Manila. When we're done, they'll need 10 people, and the client has told me if it's 10 people, I don't need to go to Manila. I can put them in Jersey City. All right, so let me show you how this stuff works. Here is, won't bore you with the details, but if you are a compliance guy, you should really enjoy this. With our platform, here's an actual proof of concept we did, where we had on the left column is a typical onboarding transaction, the actual time it took to do the different steps in the client's sort of as-is environment before the automation. So this is, I said before automation, this client already has a workflow tool, already has people offshore. They've kind of worked out all of the traditional methods clients use to automate this stuff. And in general, they're taking 13 hours of work to process these documents. All of the digitizing of data using these digits, all the stare and compare, all the application of policies, and then when we did our proof of concept, we found that for that same average pool of clients, we could do it with 3 hours of work. And this is right out of the box before we could even start customizing or modeling their documents specifically. So just off the bat, applying the automation we had with our MarKLogic platform, we got almost an 80% decrease in the amount of time a person spends on this. And we project that we could easily get this to 90% plus and take the average time down. Now, with the average time, what that means is there's a certain number that will go straight through, but there's a certain number that will require humans to handle exceptions and escalations, et cetera. So this is typical of the result we get right out of the box. Questions so far? Yes?
If you really implement this, that would mean this is a paperless bank after this.
Well, I've heard paperless many times over the course of my career. If you remember when Lotus 123 was going to make us paperless? So no, I think we all have this ambition that eventually this will be a cold, dark room. Okay, and an example I would give here is I don't know if any of you are old enough to remember reconciling trades. There used to be a function in banking or in trading where you get a confirmation from your broker the trade was made, you get a confirmation from your counterpart, and there was a group of people who would match them to make sure that what you're posting in your ledgers was correct. That function doesn't exist anymore. That is completely paperless. There's nobody, I don't know any bank that has people who do that. That would be great. I think this, for me, is asymptotically approaching paperless.
There is a second question in this one. If it's not, as you confirm, paperless, how do you guarantee compliance to the very end in that sense?
Okay, good question. Now, I'm going to save that question until my next example, because this example, this happened to us. So here's FATCA classification. Now, I happen to come from a country where the IRS has enormous amount of power to regulate the conduct of banks all around the world. If you are a bank that is doing business in the United States, you must classify your account holders as either U.S. residents or non-U.S. residents. This is the FATCA law. And now other countries have liked it so much they're implementing a similar regime called Common Reporting Standards. But the idea is that you have to ask all of your customers, are you an American resident? If so, you fill out a W-9. Great. If you're not a U.S. resident, you fill out a W-8, which means you're withheld differently. And there are different types of W-8s depending on which country you're from and which treaty benefits you're claiming. So, long story short, one of my favorite forms is the W-8 Benny. It's a 12-page form that lots of people fill out by hand at their bank. I'm not an American resident. Don't withhold me as an American. My country has treaty benefits with your country. Therefore, you don't need to withhold me at all. Somebody in a bank has to take that W-8 Benny, which is often handwritten, type it in, validate it. Okay? If the guy was saying he was a U.S. resident, you're done because you're withholding him as a U.S. resident. But he's not. So what you have to do in addition, you've declared you're not a U.S. resident. You come from this country that has these treaty benefits. I now have to perform due diligence of all the information in the bank to see, do I have evidence that you are actually a U.S. resident? Do you have a U.S. phone number? Is there a U.S. address? I think in the future people are going to start looking at IP addresses. But in official correspondence, do you have another office in the U.S. where we could start withholding you? So that process, in general, for an analyst to go through that, takes about an hour, hour and a half of a skilled analyst. So he can do maybe 8 of these a day before he hangs himself in the washroom. Terrible job. It's a terrible job. Talk about your ultimate stare and compare. Here's a bunch of data. Look through. Can you find any evidence this guy's in the U.S.? With the automation of our platform, first of all, we can automate the input of the form. So handwritten or typed, whatever it is. Of course, if we can get electronic form, we don't have to do anything. That's even better. But then we can then go through all this KYC documentation and look for what we call U.S. indicia. And there, the IRS has defined a set of rules that says this is what you're looking for when you're looking for U.S. indicia. So in our example, we can do a W-8 Benny on average. A lot of them go straight through, but on average 4 or 5 minutes. So our guys handling exceptions are doing 12, 15 an hour before they hang themselves in the washroom. So the reason I want to hold on to your question, I did a proof of concept for a bank, a large bank, a well-known bank in the U.S., and they said, okay, KPMG, with your fancy automated tool, you need to prove to us that this works. I'm going to give you 200 accounts that we just classified this year. And I'm not going to tell you, oh, here are the accounts, here are the forms, here are the data. Give me your classification. So we ran it through the platform, we did the 200, we gave it back to them. They looked at them a couple of days later, they wrote back and said, all right, of the 200 that we gave you, you got 55 of them wrong. That's what the client told me. So I don't know about your school system, where I'm from, 55 wrong out of 200 is okay. Not in banking, not in banking, not in banking. So we went in and we did the analysis, and we went back to the client and we said, you know what, these 55 you're talking about, let me explain these to you. There are about 40 of them where you may not realize this, but you applied the 2015 FATCA rules. The new regime took place in January 2016, so you actually, these 40 are wrong, okay? These other 15 here was a combination of you missed something. You missed some US indicia, or we have a finer classification than the bank does, so we actually split this into two, and you didn't recognize the second one because we have the most current rules. Very powerful meeting. Love that meeting. Because, and I'll say, from a compliance point of view, we run, just for this example, we run more than 8,000 validation and due diligence rules on every account. The file clerk in Manila is probably doing as good a job as he can, but I put up, and any of you could take his place if you want to, but you're never going to get that kind of consistency as you will with the automated platform. And from a KYC perspective, I've had similar results. I told my clients, you know, some of them asked me, can we convert all of our existing data? That would be really sweet. And I said, well, be careful, because if I do that, my experience is I'm probably going to flag a bunch of data that are no longer valid and would force you to do a massive remediation exercise. Why don't you just wait on your normal cycle and we'll do it then? The machine does it better. For me, this is like the self-driving car. People are starting to realize that self-driving cars do better than humans, and at some point in the future, we'll take the humans off the road to keep us all safe. We're going to get to the point eventually where humans will no longer be permitted to do this type of work because they're just not as good. You miss things, and when you miss things, the bank loses money. All right. There's a regulation in the US called CCAR. Big banks have to show different effects of macroeconomic incidents on their balance sheets. It's similar to BCBS here in Europe. And what the bank asked us to do is they had a document repository of these PDF type of files. These are lending documents now. And these documents are, they called it a data warehouse. We learned to refer to it as the data cesspool, okay? Because these are documents like 123.pdf. There are a bunch of documents related to loans, but there were no metadata attached to these documents. And they had 300 people going through, typing the key business elements of these loans to get these data so they could use in their CCAR reporting. What we did a proof of concept. We're now moving forward. We've just gotten the first tranche of this work. And Justin will show you an example of this. What we do, in addition to the ingestion of the document, anybody can do document ingestion. The stack of technology we have to do OCR and natural language processing, the bank also has. What we've done is we've married that with the ontology of what is in a lending document and sort of our KPMG IP, so we can take this data cesspool of millions of documents and segregate it into client, and for each client, what are the facilities or the loans that client has? Within those facilities, what are the events in that loan life cycle? In that event, what are the documents that belong to that event? And what are the data that actually belong to those documents? And we can pull that up from a cesspool full of 123.pdfs. And I want to keep going because I want to make sure you guys see that in the demo. And so I'm really happy because the 300 contractors will be released. I love it when my competition has to fire people. That's great. And we're going to pick up the next batch of 20, 30 million documents to continue, all based around the same technology, same concept. Automate what it takes currently, what humans do currently, and do it better, faster, cheaper, focus on the better. All right. So Justin, why don't you lead us through a couple of the key elements of the platform?
Sure. Just switch over here. Okay, great. So what you're seeing here, usually the process
This begins, we ingest documents. It could be manually ingesting by clicking upload and submit into the system, but normally we hook into document repositories or batch upload documents. Here I've pulled up a document we've already processed in the system here. I'll just scroll up to show it's a credit agreement here for a client. And what you're seeing on the right-hand side here, this is the actual extract of the data. Here you can see the field, the value, as well as a confidence scoring here on the third column of how confident the system is that it extracted that value correctly. So here it's using the OCR technology coupled with the natural language processor to actually extract the data from the document, as well as the natural language processor able to recognize what that data field is. So for instance, this facility amount here, which would be the loan amount, the system was 99% confident that it extracted that value correctly off of this 85-page credit agreement. The real power of the natural language processor comes into effect when there's multiple values or multiple dates or addresses in these fields, or in these documents rather. So if I scroll down here a little bit, you can see these ZZ values. These are just other values that that weren't in scope for this specific document type. You can see here there's about 15 or so different dates that the system was able to read off of this 85-page document. But we really wanted to know what was the maturity date for this credit agreement, or the termination date. So if I scroll up here a little bit, you can see the maturity date here in this line was March 15th, 2007. Again, the system 99% confident it extracted that value correctly. If I scroll through this document here, I think on, I have it highlighted here. You can see the termination date right here, March 15, 2007. So that's really the power of the natural language processor, able to read that document, extract the correct value for that specific item that we're looking for, that value or that field. So this is for, again, CCAR reporting. I'm going to switch gears now and go over to a different report view, different ways that we manipulate the data. I'm going to click on this detailed report view, close out of this document. Here, this is, we were able to marry not only the values we're extracting off of those documents, but we're also able to combine it with core banking system data all in this one report view here. Each line item represents a different document for CCAR reporting. So this renewal is linked to one specific document here. Sorry for it's probably 100 or so pages, so it's taking a second to load. Yeah, here's that one credit agreement. A modification could be linked to a different document. The system does this automatically. A different view here, graph view. This is by event. So for instance, this specific renewal has all these different data elements or data fields that correlate to that specific renewal in time. Or same thing with this maturity date. Again, different events, different dates, different fields that we're able to visually depict here. I like to call this the ontology view. I can also show it by KBE, which is key business element. So for instance, this facility or loan under this GCI, Global Customer Identifier, has these different KBEs. And then if I click on one of the KBEs, such as the value, it'll show me all the different values for all the different events that happen within that specific loan. So that's just one way of mapping the data for CCAR reporting. I'm going to switch gears now and talk a little bit about...
So just to sum up on that one, keep in mind, what we're receiving here is 123.pdf. And to go through these hundreds and hundreds of documents and try to find, let's say, 10 specific data from one of these PDFs takes a person a certain amount of time. And that's the digitization through your digits. And what we've been able to do is, I think the power of this, and where MarKLogic comes in here, is less about OCR and ICR, because everybody has that. But it's the ability to map the ontology into this so you can create this data structure in an automated way, because now these data are actually usable. Okay.
Right. Continuing on here, just want to show our KYC use case. Again, I've pulled up a document we've already ingested. This is a client representation letter. When the document's ingested, the system automatically creates an e-form here on the left-hand side for the specific document type that it's also reading right from the document itself. Here it created this client representation e-form, and then any values that you're seeing here, such as this average monthly transaction side, are the extracted values off of the PDF you're seeing on the right-hand side. Here, I'll just scroll down to show you this PDF here. I can also go back to the linked references to show you the extractions, just like we saw in the... oh, sorry about that. Okay. I probably got timed out. There we go. It's just an operational dashboard you're seeing. We go back in our document here.
Where are we pulling these data from, Justin? Montvale, New Jersey?
Yeah, not the greatest internet connection here. Here we go. Here's that link references page just showing all the extracted values. Again, the field, the value, and the confidence scoring of how confident the system is. I'll scroll down through some of these values here. You can see we were able to extract the address, the name of the entity, the expiration date, country of incorporation. I could scroll down a little further here. Pulled out shareholder information, who the shareholder was, the date of birth, as well as the percentage of ownership, as you could see in the document here on the right-hand side. Pulled that out perfectly, as well as some subsidiary names and ultimate beneficial ownership, which is necessary for the KYC due diligence.
Sorry, Justin, a question?
Sure.
Yeah, didn't you highlight the concepts you identified in the PDF?
Yes, we do have the ability to highlight. So continuing on, I'll show a little bit of the policy engine.
Let's go to the policy detail.
Sure.
I want to show the thousands and thousands of rules.
Sure. Going to go to the going to go to the KYC work view. Open up a KYC case. Here on the left, this is really a workflow of the system. Going to just click on one of the last cues. It'll show all the due diligence steps here in one screen. What it's going to open up to here is the policy details. This is really the power of MarKLogic and our policy engine. Here on one screen, you can see all the different rules and confirmations and checks that were run on the data. We can get down to a very granular level of detail. I can actually drill into one of these policies, such as a confirmation of registered business address. The system will actually tell me which document it's pulling that specific registered address from. As you can see here, we have a result column. It's really a true or false rather than a success or failure, but you can see the registered address was extracted from a valid articles of incorporation. There was a success there. You can click the policy itself, bring up that articles of incorporation here on the right-hand side to verify that we did indeed get that registered address from this specific document.
Yeah, so on that upper left, this is really important. These are all the thousands of rules we talk about that the machine runs through to determine the risk level, additional documentation required, whether additional due diligence is required. One of the really great features of this is if, let's say, in the news tomorrow, Michael Henry was found funneling organization to some terrorist, they would go to my bank and they would say, tell me what you know about Michael Henry. And that can tend to be a traumatic experience for a bank because it's very hard to retrace what was actually done. There's a box of files somewhere. What we can do is we can actually, and this is a great feature of MarKLogic, at a point in time, we can go back and say, Michael Henry onboarded at this date, here are all the documents we received, here are all the data we extracted from those documents, here are all the rules we applied, here there was an escalation, here there was an operator override, all that is captured at points in time, even if subsequently the policies or the data or the documents have changed. So this is a very powerful feature for our banking clients, especially the ones who are responding to requests from regulators, the full audit trail of every transaction performed. All right, so that's what we prepared to talk about today. We'd love to take questions, and we'll also, of course, be here for MarKLogic World. But any questions about what we've been able to do here? Yes. Correct. So when we do the point-in-time auditability check, that's what we're using. Yeah. We love that. We love to show it. Yes.
KYC and FATCA. Do you do as well AML?
Yes. Yeah. We do when KYC/AML. So it's that part of the onboarding life cycle, and we will also do specific AML processing like PEP checks, OFAC checks, source of funds, and stuff like that. We do that as well. Correct, yes. Mm-hmm. Yes?
How do the subject matter experts enter the rules? What's the interface? How do they work with
Okay. The joke I like to tell is we have extracted the contents of many partners' brains into this tool. We have a rules engine on the front end of this where we define the policies and we do use cases and decision trees for every regime that we put in, and we go to our experts either in the US or overseas to get those rules into the tool. For FATCA and CRS, actually quite straightforward because the rules are the same. The IRS determines the rules, everyone has to follow them. For KYC, when we implement this for our customers, we always need to work with the customer because their KYC policies are all different. So it's part of our services that we provide is model their rules in addition to the base rules we have in the tool. Yes?
Internal audit, is this involved in the setting up the rules or how do you manage that?
Yeah, so the question is, how is internal audit involved in setting this up? You know, once again, for FATCA and CRS, we work with the client's tax departments, but it's really just to educate them on what's the current FATCA CRS rules. For KYC, we will work with the bank's compliance department and also work with internal audit to make sure that we are running whatever tests they want to run to make sure this passes muster. In general, once we get the internal audit people working with us, they're very happy with this because they can see all how easy it is to audit. That's a big selling point of the platform. Yes?
Is it a product you sell or is it a service you offer?
Okay, the question is it a product we sell or a service we offer? We will do either. We have 14 live clients and 2 big banks in kind of building up stage. Every one of them has done the analysis themselves and decided to take the service. Okay? And mostly that is around the integration challenges. If we can define simple interfaces in and out, a lot of our clients don't really want to get involved in configuring and running the platform, which is fine with us. But we will do either.
I guess those services are restricted depending on if you audit or not the bank.
For KYC AML, we are restricted from offering it to audit clients of KPMG. For FATCA or CRS, we can do it as part of tax reporting, so it's a little bit different there, and rules will vary in your country. Yes?
The information extraction rules to identify the concepts or the addresses or the rules.
Yep.
Do you have some kind of editor for developing these rules, or how is it done? Is it all implemented in?
No, just as we have a rules engine to do the policy rules, we have a natural language processor front end where we define the ontologies and the extraction rules. So it's a different package. Yeah.
But you have to define the rules, like if that address is not found in any directory or something like that.
Yeah, it's a little more complicated. So we have our ontology and our library of model documents. So we know that for an article of incorporation, here are the data that you will find. We expect to find an article of incorporation. And if the platform fails to find it, it would highlight it as an exception, and that's why we're not at 0 people yet, because people would then have to go in and do the staring and comparing, right?
Manual process.
Correct. So there's a library of models for KYC documents that we have already done, and every client has some new ones that we model. There's another part of this which is more the policy side. If I am a hedge fund incorporated in the US and I want this type of line of credit, there's a set of documents and a set of data I have to get from those documents that's defined in the policy engine that then hooks back into the documents. So we would create a request for information that goes back to the front office that says, you need to collect these documents, or 3 out of these 4, or 2 out of these 3. I need a business address. It can come from one of these forms. You know what I mean? But that's more at the policy level. And then there's the document modeling where the ontology determines what data come from which documents.
So in former times it was all done manually?
I wouldn't say former times. Go to your bank and ask them how they do it today. Go give them a W-8. I assume you're a W-8. Go give them a W-8. Ask them, what are you going to do with this? Oh, I'm going to type it. And then I'm going to look you up. I'm going to look at. I've got 3 different screens I'm going to go to.
So it's basically information extraction relevant information?
Part of our offering is the extraction. That's very important. But there's equally important is the whole policy modeling. How do I do, what is the risk of this entity? That doesn't come from a document, right? That's your bank's policies applied to these documents, to these data. Does that make sense?
Yeah, perfectly.
Okay. Yeah.
Is it sort of KPMG IP to disclose what the other products are that create this solution?
Oh, I'm happy to do it. We're at the MarKLogic conference. MarKLogic is the core of everything we do. And the rules engine, we use Adaptive, and for the natural language processor, we use SmartLogic, and our workflow tool is TIBCO. We took off-the-shelf stuff. Our value add is the IP behind the compliance. Yeah.
How much development effort you have to spend for being at this point?
When you ask that question, aren't you always tempted to answer, if I had to do it again, this is how much I would spend?
You know, if you will be positive.
Yeah, correct.
You have some
Correct.
lessons learned.
No, we have been, we're a very conservative organization, and before we signed our first client, we had about 18 months of work. Yeah, before signing our first client. Yes?
You made similar experiences in Europe with BCBS or other regulations?
We have started playing with BCBS, and we know the rule set, and we work with our European partners here from KPMG. We will develop BCBS with a European partner client, but it's the same as CRS or same as CCAR, so we know the regime. We are doing one of our larger clients now is actually a foreign bank for KYC AML, so there's no restriction of the tool by language or by jurisdiction. And defining a new regime is just defining the policies around that regime and the ontology of the data matching to the documents. So we know how to do that for a new regime, for a new regulation in the US or in Europe. Yeah, question? Somebody had a question over here? No? Yeah.
You're a large organization in Europe. How do you operate? You've got office with representative here who can help, like from France and Germany?
Yes, we have a couple of live opportunities in France, so I've been working a lot with my French partners, and if you're from France, I'd be happy to connect you with them. And we're doing something in Asia right now, and we're doing other things in Europe right now. Is my time up? Or? Oh, okay. Hi. Yeah.
Just one question. You
Take two.
Semantics?
Sorry, go ahead.
You're already using semantics for that,
Yeah.
or is it just that you annotate the concept within the XML documents?
Semantics.
Semantics. So
Yeah.
you also are able to do inferencing stuff, like if you want to have a compliance check on a person, then maybe he is also connected to a not compliant person with 2 steps. Right? Do you have some service like graphic visualization of such things?
You know, there's we do part of what you're saying. So we certainly look at semantic relationships between words and documents, especially when we do negative news checking. Okay. Now, I think where you're going is what I think is a great thing for the future is, can I then look at the relationships that person has with other people in his circle? There's a great little tech startup I've been talking to that does that creates those webs. For me, that would just be more data to ingest, so I would love to do that, but we haven't done it yet. But we're looking at that. All right. Well, I appreciate everyone spending so much time on the riveting subject of compliance.